Hey, how's it going? It's Jesse here from the REI Conversion Podcast. We're soon actually rebranding to Pebble, but I don't know when this episode is coming out, so I'm still going to stick with the REI Conversion Podcast. Nonetheless, I've got an awesome guest here today. I'm always looking for the day that we can have him back on. We've got Travis King. Travis is close with our family here at REI Conversion. He's actually part of our team meets. And anyways, one of the things I love about Travis is how I say this in the podcast, but how cutting edge he is. You know, the different things that he tries within land investing and some of these big wins that he's making. And we're going to be talking about a very, very specific strategy. But before I talk more about that, I do want to let you know this podcast is brought to you by Pebble. If you are looking to systemize, centralize, and automate your land investing business, make sure you hop on a call with me. If you head over to pebblerei.com, hopefully that site is up during this the premiere or when this episode gets published. But you do want to head there, book a tour with me. I'd love to share how we are helping other land investors processify, centralize their operations so they can actually scale and grow. One of the biggest struggles with land investors is data management. All your properties, all your leads, all your documents. Where do you handle that? And when you are doing it and building it offline, how do you build processes out of that? So that's where we've come in to build Pebble, really bring everything together and allow for fluidness between all these different things to communicate with each other, from doing your due diligence to generating documents to handling your mailing. Well, what if you're texting? What if you're doing all this? Well, where does that all get centralized? And that is what Pebble is all about. Head over to pebblerei.com, book a free demo with me. It's with me. It's nobody else. I love chatting with all you guys. Anyways, coming back to the show here, we are going to be specifically talking about subdividing. It's a term that it scares a lot of us, including myself, but Travis is going to shed a lot of light on this and how much value and how much of an impact this is making on so many other land investors who are trying this kind of a play or trying this kind of a strategy. Nonetheless, I'm going to shut up now. I'm going to jump right into the episode that I just recorded with Travis. I hope you guys enjoy. Cheers. Hey, how's it going? It's Jesse here from the REI Conversion Podcast, soon to be called Pebble. I'm super excited because we have one of my favorite people back on the show. It's always a pleasure to have him, Travis King. How are you doing?
Hey, Jesse, thanks for having me. One of my favorite places to be on your podcast here, in your community. Absolutely, man.
We love chatting with you. If you guys haven't checked out some of the stuff that Travis has done with us, including some of the past classroom webinars to some of the past podcasts, make sure you do that. If you just head over to reiconversion.com, go to the resources tab, you're going to find classroom there. Check out some of the awesome stuff that Travis puts together. Now we've got a huge episode here to be deep diving into. But before that, guys, I want you to stick around. All right, right to the end. I'm going to tell you right now, it is going to be worth it. We've got some things to be sharing with you, some things that'll make a huge impact in what you're doing right now, something that is coming up. So it is timely too, so hopefully you catch it before it actually happens. So make sure you stick around. There's a lot of stuff that we're going to be talking about. But today, we are going to be talking all about subdividing. It's one of those, it's uncomfortable for me. You know, I've heard about subdividing, but it's one of those terms that freak me out because I have no idea what it's about. And that's exactly what Travis is going to be talking about today. Again, I've heard a lot about it. So Travis, there's no introduction for you because everybody knows who you are. So welcome to the podcast. So let's start it. Let's dive right in right now. Can you demystify or simplify the concept of subdividing for our listeners who may be either unfamiliar like me or have or intimidated when you even hear that word. Can you sort of shed a little bit of light on that?
Yeah, absolutely. So I think you're right. And that when you hear, and a lot of people, when they hear subdividing, the first thing that comes to some people's mind is these big developments, right? With sidewalks, jogging trails,
Yeah, things we
infrastructure.
feel like we just want to avoid, right?
Yeah, they think of subdivision, right? Not subdividing, and they think of expenses, right? A lot of expenses, infrastructure improvements, power, roads, all these things, and utilities. That's not what I'm talking about. Like when I talk about subdividing within our community, within our space of land flipping, land investing, it's really the subdividing that I do would, in a lot of places, unfortunately there's not like universal or national language, right? But what I do, and there's a lot of states, they'll call it minor land splits or minor land divisions. So it's really just taking like a single parcel, we call it a parent parcel, and splitting up into 5 or less children parcels. So you're not, you're not building a 50 lot subdivision. You're not putting in jogging trails. You're not paying for all these improvements that take, 18 months or something to this development. Really what we're doing is we're just splitting up, we're drawing lines on a map essentially, right? We're having a survey done and we're splitting it up with the goal being to force appreciation, right?
Yeah. So this is this is definitely not something we typically do when we're flipping land. So how and when did you come across doing this strategy?
Yeah, well, I think like most good ideas, it's borrowed, right? So you know what I mean. I'm reviewing a property. It had to be, I don't know, maybe 5+ years ago or something, 4 or 5+ years ago, and just from like a Google Earth or an aerial perspective, I'm zooming in on and I'm looking at this 40-acre parcel in northern Arizona, and what I noticed is the adjoining, or neighboring parcel was carved up into 4 or 5 different lot sizes, and you could see that it started out the exact same size as mine. And I'm kind of realizing, hey, I know there's a market for these smaller, like 5 acres and stuff. Right. And I also know the price per acre is significantly higher, with a smaller size property. So I could kind of recognize what somebody had done here. So it really just, at that point, I just said, went down that rabbit hole of reverse engineering, their deal or deconstructing it. And kind of look through. And of course, the cool thing is a lot of this stuff is public information, right? So I was able to just look at, okay, they had a survey recorded for that parcel number. So I go pull that survey, look at the survey, see who the surveyor was, right? Start calling them, give them my parcel number, and from there you can kind of just like deconstruct or break down their flip, and really that's how I started. Was just stumbled into it and just observing that, hey, I could probably pull off something similar. So just went from there, and started calling the county and planning and zoning and asking questions and saying, what can I do? What can't I do? And then also looking at the economics of it, like, what's this thing worth whole as is, right? Let's say 30,000, and then what's it worth after I subdivide it, and perhaps like 70,000 or something, after just splitting the parent parcel up. So that's really how I came into it, was, it was recognizing the opportunity by seeing that somebody else had done it.
Doing a little bit of detective work. That's what you were doing. But let's take it a bit back here. So, and I think I know the answer to this, but just for our listeners' sake, why subdivide? Why split up a parcel into more parcels? Doesn't this just add more complexity and time to actually flip a piece of property then?
Yes, it does add time, and that you're right, and that you have to, get a surveyor lined up. You have to get on their schedule, get them out there. You've got to potentially go through some meetings, get things recorded. So it certainly can add, 3 to 5 months, let's say, depending where you're working it. But at the same time, it pencils out, the math is usually worth it. And that you can quite often, like with us, we target forcing, at least 100% appreciation is kind of the target, right? So it really starts to pencil out depending how much the value of the first parcel is. And I think the other thing is this is kind of a play in my playbook. I've been running, like I say, for 4 or 5 years, and it was something, as I would talk about, there was very little interest, but I've noticed in the last about year and a half, there's getting to be a lot of interest in this hot sellers market where acquisitions are a little harder for some people. If you can create, take one acquisition and create 4 or 5 dispositions, properties to sell, you're in good shape, right? So I think that's what a lot of people are interested in, is kind of adding that play to their playbook, right? Or somebody's moved from beginner to intermediate or advanced, and they're really looking for a way to add value versus just capturing value or capturing equity.
Right.
So there's a lot of times the appreciation is significantly worth it. Ironically, the other thing that first when I started doing it, it wasn't for the cash flip or forcing a ton of appreciation. I was kind of all in at the time on seller financing and building this note empire, right? So I was looking at it from the perspective of, for example, with this 40-acre parcel, I could probably sell it on payments and create one note, $300 a month or something, right? If I split it up into 4 parcels, in my mind, I could sell that in 4 notes. That I now just created 4 notes out of one acquisition, right? So like $250 a parcel, worth $1,000 a month in notes. So for me, that's what's interesting. You can work it both ways. If you're all in on seller financing, it's a good play. Or if you're just trying to force appreciation, there's potential at times, to force 6 figures plus, on one deal, and then just cash in the chips, right? And really bring in a lot of money, that you can put back into your marketing.
I know you covered a lot in that last question, but I want you to take it, repeat that again. And I think you did mention it, but how much appreciation can somebody expect to force?
Yeah, so I target 100. I want to double it. You can sometimes you force more, sometimes you force less, but approximately right around double. For me, and you'll see, like with the cheaper, less expensive properties, it might not be worth it to you. Even doubling it, right? If it's only worth 20,000, doubling it to you at the cost of subdividing might not make sense, right? So there's certainly that like minimum, value, but I target 100% on forcing the appreciation.
Let's talk about that. You mentioned it too, the cost associated with, with a minor land subdivide project. How much should they sort of expect?
Well, so like all great answers questions, it starts out with it depends, right? So it depends in that if you're subdividing in like I'd say a rural area, a rural county, a little bit farther from metros, it kind of really starts with like who has the jurisdiction, meaning who's going to review and who's going to approve this subdivide project. If it's reviewed sometimes at a county level, and especially in more rural counties, there's a lot of times you can get away with, it's almost like they call it a administrative, subdivide or an administrative approval, meaning they don't actually have meetings, right? They don't have meetings. You're not submitting application packets. You're just sending a surveyor out there. Of course, I'm simplifying a little, but you're essentially sending a surveyor out there to record the survey. You record the map. They assign some new parcel numbers, right? And it's as simple as that. And we're in and out of there. If we do it ourselves, $3,000, $4,000 or something. Now, when we're working closer to metro areas and maybe the jurisdiction is at a city level, right? Meaning the city would, I need to approve that. Of course, they're going to have they're going to scrutinize the deal a little more. They're going to want a pre-application packet with your, how you're planning to lay out, all the children parcel, and they want to approve that. And then they're going to have potentially another meeting or two. So of course, more time and more cost, right? So I'd say I have an example. There's 2 projects we're working on right now. And I think both of them will end up being between 12 and 15,000 total on the subdivide. But both of them will be forcing, approximately 100,000 in appreciation. So we're real comfortable, right? Paying out 12 or 15. And in that situation, that one would include like leveraging a land use consultant. So it's kind of the done for you solution in that, I'm drawing up, chicken scratching how I would carve it up and then handing it over to him. And then he's doing all the heavy lifting and all the coordinating with the city and everything.
Right. Okay. Now, on average, how long can things sort of take to get reviewed?
We seems like between 3 to 5 months, or is kind of where we're landing, which isn't bad. You know what I mean? That's really that's not too bad. Especially like in the development world, right? You could be, anywhere 14 to 18 months, right, on a development project and stuff. So
Right.
the key for us is that when we subdivide, before we go into the subdivide project, we have dialogue with our specialized land agent, and that
Mm.
we're saying, hey, here's how I think we should split this up. But for example, we don't want to create 4 or 5 listings of the exact same size parcel, right? And then list them all against ourselves at the same time. So we might strategically, carve it up in such a way that we've got 3 different sizes. And
Mm.
that presents, the buyer pool 3 different choices or options, at 3 different budgets, for example, right? And then 3 different price points. So when we're listing, we're not really listing against ourselves. We're giving
That's
people
right. That's right.
options.
So there's
So
even
if you
strategies
right,
the way you
so if
guys.
you're right sizing the properties like price point and size, then I feel like the low days on market on the disposition side, really make up sometimes for that project, planning and approval and surveying, kind of on getting everything subdivided. You can make up some of that time with low days on market, I feel like.
Mm. Now coming back to the jurisdiction that reviews, is there one jurisdiction that is better than the other?
Well, I think like it kind of depends on the outcome. If you're looking at like velocity and speed, these areas where there's exceptions and where these counties will just do administrative approvals. You can get that done real quick, in and out, and then it is essentially as fast as a surveyor can get out there. So we kind of know our exit strategy going into escrow. When it's in escrow, if I want to subdivide it, I'm already calling the surveyor and I'm getting on their books and I'm getting scheduled because they might be 30, 60 days out, right?
Right.
So I'm already getting scheduled, and I'm going to move that as fast as I can. But some of those minor land divisions that are just administrative approvals, we can get through pretty quick. So I like that play in like the rural areas. But usually, anytime you get close to a metro area on that urban fringe, within an hour to a metro area, a lot of the times it's reviewed at the city level. So yeah, there's always more potential for them to scrutinize it. Maybe you didn't submit everything perfectly, and now you've got to resubmit it. But again, for us, that's why we leverage like a land use consultant, and we have somebody else that's that's what they do, right? Do that on our behalf, so that we don't submit something improperly, and that as we're bouncing county to county or even potentially state to state, we can't be proficient, in every county in their process. So it just makes sense to leverage a professional who is.
Let's dial into that then. So you mentioned that you hire a land use consultant to do most of your work. How does somebody go about that?
Yeah, so early on, I did everything, like we all do, right? When you're solo investors, you do everything yourself. You wear 10 hats, right? And it was one of those things as we started moving from doing more rural splits, and at the county level and administrative level, and started getting more in the city. I kind of became more aware of the complexities and really more aware of the landmines, right? All the stuff you could do wrong, and if you do something wrong, how much time it adds because of your mistake, right? So fortunately, in the last, I would say, last 6 months, I was able to establish a relationship with Mike Marshall over at Tolosa Property Group. And actually, he and we did a mastermind together on subdividing. So he came on my mastermind and was co-host, and we actually started using him for our subdivide project. So right now, he's who over at TolosaPropertyGroup.com. He's who I would recommend if you're looking to start with a consultant. I think
I'll,
that's who I'm recommending to my to my clients right now, to anybody in our community, and that's who we're using right now.
I'll make sure to grab that link from you so we can include that in the show notes, guys. And as I mentioned, there's going to be a bunch of stuff in that show notes. So make sure you do visit that. Now, a lot of people listening, they're going to think, okay, Travis, this is easy for you. You've been doing it for a while. But you also mentioned there are people in your community that are also subdividing. Can you sort of give us some, an example of another project that one of your members or yourself recently completed?
Yeah, we're right in the middle of one right now. It's a fantastic example. I had a client that got a property under contract for, let's see, is 50,000 is under contract. We valued it together at a market value being like 108. Okay, wow. So it was a good acquisition. He was, I think, 46-ish% of market value. So he's capturing, about 50% market value. It's already a good flip, but it was just screaming, subdivide me when we looked at it on the map, right? It had good road access, roads on two boundaries, which is really key, right? Is the amount of road frontage you have to the parcel, to the parent parcel. So, so we chose to go down that path of kind of subdividing it and we worked with one of the agents and kind of got feedback on what price things would sell for at what size, and how we should carve it up, kind of like we talked about earlier. And it's a situation where, he bought it for 50. It was worth 108, so we probably could have resold it for 100, right? But as it is, we're going to force. Let me look at some notes here. We're going to force 119,000, right? We're going to force 103,000 of appreciation on the deal, and this it's probably going to cost about 12 or 13,000 in subdividing fees. So not bad, you're spending 12, 13,000 to add 103,000 of appreciation.
I know you're enjoying the show episode so far, but I wanted to let you know that if you are looking to build or scale a serious land business, perhaps a 6-figure second income or eventually a 7-figure land investing empire, Travis King's company, Land Investing Mastery, has the most current and innovative education in the space. Travis goes beyond the traditional microflip that you might be familiar with and shows you how to 10x your deal size and execute on strategies like subdividing, portfolio takedowns, land sniping. We're talking 6-figure per flip strategies. If you're getting your education from someone who isn't actively investing, you're more than likely going to hit some plateaus as you try to scale. If you want to learn how to avoid the saturated red ocean markets, skip over the small stuff, and learn how to become a boss land investor, then Travis is your guy. Travis has completed nearly 1,000 coaching calls in the last 2 years that I've known him, and he has his pulse on the market. He will tell you, though, Land Investing Mastery is not a factory. They're a boutique agency built on transformational, life-changing results. You see, I'm in a really unique position, and I really mean what I've just said above. In fact, I get to speak to a lot of investors from all sorts of different education, training, coaching background out there, and I get a very good view of things from all the one-on-one demo calls that I've done. Now, you may want some social proof. Head over to pebblerei.com/Travis and check out Travis's wall of love on his testimonial page. And while you're there, you can also learn more about Travis's training programs and his exclusive mastermind. So simply head over to www.pebblerei.com/Travis for more information. So to follow up with that, is it normal to be able to get to these subdivide properties under a contract for like 46%, like your client did, and also that you mentioned the property costs $50,000 and $12,000 in subdividing? It might sound a bit prohibitive to some of the listeners here. What do you say to that?
Well, I think in today's market, I feel like we are offering a lot of people's accepted offers really are in that 40 to 50% range. But there's times like with the subdivide, if you recognize the exit strategy here, right? You recognize that you can subdivide and force all that appreciation. It allows you it allows you to offer, kind of cross that 50% mark. I feel like most kind of the traditional land flipper, because that's the only play in their playbook is just immediately reselling it.
Yeah.
So if you're subdividing and you can add, 100% appreciation, it allows you to really come in and offer, 55 to 70% of market value on the property, because now you're going to add, force 100% appreciation. So I think that's kind of the secret sauce of it, is that most land investors, and I feel like I've got my finger on the pulse of this, that most of them stop at about the 50% mark with their offer price. So if you come in at a 55 to 70% even offer, knowing you're going to subdivide it, it still pencils out really well after you forced all that appreciation, right? It's still going to look like I'm going to make up an acronym here because one doesn't exist, but like if we're in house investing, we talk about the ARV, right? Like the after repair value. My made up term is ASV, the after subdivide value. If after we've subdivided it, that, let's say that 65% offer might look like a 45% offer, right? After we've forced all that appreciation. Okay, so that's one I would tell people. That's kind of the secret sauce to picking these up. So I'll kind of use my land sniping strategy of prospecting for subdividing candidate properties and build my mailing list, right, of single properties that are great candidates for subdividing. And then I can go in and lead with that real aggressive. That's why I call it smash mouth subdividing, is we're going in aggressive. We're going in with an aggressive offer, more aggressive than anybody else. But that's kind of how we get it under contract. But again, it's another one of those, sounds great, right? But if we're offering 55, 60% and the property's market value is 100 plus, that's a lot of money to a lot of people, right? So of course, we self-fund in our own deals, but I've got clients that have leveraged. In this example I gave, our client is utilizing our Freedom Land Capital, our funding wing, for the deal. So we're funding the acquisition, the purchase price. We're funding the subdivide costs. So it's it'll be no money into the deal, all to the exception of mailing costs for the client. So yeah, I mean, that's something with Freedom Land Capital. We'll fund deals if the equity's there, and if we feel like we can add that value and run the subdivide play on the project. So I think that opens things up to a lot of people. You kind of said earlier, why does people are intimidated by it, and I think one, it sounds complex, and two, it takes capital, right? So if you take care of those two things, it's like I just solved your capital problem and I just solved your complex problem. Trust me, I'm not that bright, right? So if I leverage consultants and I kind of learn the ordinances in an area, and then you leverage a funder or a capital partner, that really takes care of two of the big concerns.
Well, let's talk about that. Like this all sounds like a great payday. And a lot of people might be wondering, well, if it's so good, why isn't everybody doing it if it's so profitable?
Well, I think like we talked about the capital, right? Everybody assumes it's incredibly expensive because there's a lot of people are thinking of like infrastructure improvements. So when you add utilities, you add power, you add roads, that costs a lot. So almost all of the projects we do, we're not adding roadways and we're not doing those improvements. We'll probably get into that. But right now we're not, and especially the projects like we're partnering on, we're not. So that doesn't take as much capital as you think, and then we'll also fund those projects. So we kind of take care of that capital. I think to a lot of people it's just scary, right? I think it sounds daunting to either the beginner or to the casual dirt flipper, right? Who they understand, they know how to run this one play they're running, just the micro flip, right? They get this play, they're comfortable with it, and like anything, when we're comfortable with something, we just wash, rinse, repeat, right? Until it doesn't work anymore. So I think it's a little scary and it sounds a little insurmountable and daunting, from the outside. But especially what I'm talking about is these minor land splits, right? You can do major subdividing projects, and you can spend a couple $1,000,000 to buy a big ranch that's, worth 4 million carved up, right? But that's not like the play I'm talking about running or what I'm talking about today. It's more like minor land splits, 5 or less properties. So I think if you get those big numbers out of your head, it's not as scary. And I think, kind of hand in hand with being scary is just unfamiliarity, right? People are unfamiliar with it. We shy away. A lot of us shy away from things we're unfamiliar with, uncomfortable with. So you kind of step out of your comfort zone, get familiar, get acquainted, and then lastly, I think is like connections. You don't know. Like even when I started doing it, I didn't know there was a such thing as a land use consultant. I didn't know that there was a real estate attorney that I could call that could do some of this stuff, right? So like everything, when we're new, we try to do everything ourselves, right? And we make the mistakes, but that's how we learn it. Kind of you stumble through it. And you get through one project, and guess what? You know more than 99% of the other, land flippers in the space.
Right.
But I think that's one of those things. Once you work through kind of that unfamiliarity, you understand capital is available and all over out there. That there are connections. It's not a DIY, a strategy. It's really something you should leverage somebody else and force enough appreciation that you just build that into the cost of the project. I think it gets less scary when somebody, like I'm doing right now, somebody breaks it down for you and just explains it. It's not complex, and you don't have to be any brighter than the next guy to pull it off. You just kind of got to know where to, how to prospect, how to offer, and then what to do with it once you get it under contract.
That's one of the reasons why I love chatting with you. And a lot of people don't know behind the scenes. We get a chance to chat with Travis here almost on a weekly basis as he joins us in some of our team calls. And, the things that you are trying, the things that you are doing, it's very rare that I get to see somebody who is helping others in the land space, try different things, teach different things. Some people might call it advanced strategies. I don't know what you would call it, but I think it's you're rolling with how things are changing as well, and it helps us, and it also obviously has brought a lot of value to a lot of your community members, a lot of our users. I want you to share with us, if somebody wants to learn a little bit more about subdividing or other strategies or other playbooks, and you've got so much that you're trying and you're sharing with others, how do they get in touch with you?
Well, our website is, my website's landinvestingmastery.com. And I run a mastermind that this is exactly what we do, is these, what I'd call advanced strategies, 6-figure strategies. I'm in that. So you can go to landinvestingmastery.com/mastermind if you want to learn more about mastermind and strategies like this. That's certainly a good place to start, is just visiting our website and get familiar, check it out. You'll see some of the coaching I do over there. You'll see some of the training, and really it kind of came from though, like me sharing like the strategies I was doing myself, and then also recognizing and realizing as I work with clients that were becoming more advanced, kind of moving from intermediate to advanced, and wanting to scale up their business and double their income. And how do I do that? And the answer is not just send twice as much mail, right? Especially with postage costs, So we go, okay, how do we add plays to the playbook? So that's kind of the way I view it. It's like, what got you your first 100,000 or 300,000, whatever you're doing right now, like your next, or to double that, it isn't the same, So there's some of these strategies like this. If we sprinkle in a subdivide project, 1 or 2 a year on top of your business as usual plan, it can make for a pretty good year. So I think but some of those advanced strategies, like subdividing is one. So I did on my mastermind, I did a 3-part series, and I had Mike Marshall come on as co-host. And we did a 3-part mastermind, 375-minute trainings, about like the intro to subdividing. I called it, minor splits, major profits, right? And it was really about doing minor land divisions. And I'm going to give, Jesse, we'll get it set up to where if you can link on your resource page here, I'm actually going to give people access to the mastermind that I host. I'm going to share the slides from that, and I'm going to share the training video from like the part 1 of a 3-part mastermind, just so people can get familiar with this concept, without having to pay. And I think that also gives you like an inside look at what we're doing over here and with the mastermind and some of those strategies. I've got clients that give me incredible feedback that they'll take and implement some of these strategies and like, hey, in the last 3 months, I made $120,000 with this new play or this new strategy. And I'm like, that's incredible, right? To see action takers and people implement it. So I think there's a lot of land investors that as like the niche is kind of matured, and as the market has changed, I think there's a lot of people that are looking for additional strategies beyond just the flip, and beyond just sending 2x, 3x the mail they currently are.
I mean, I love what you said earlier. You said it. Once we're comfortable, I mean, we're not here to send double the amount of mailing. Can we find ways to add value, like you're doing it, but with subdividing here? I mean, stuff like that is incredible, and it makes a huge difference in what they're doing. A deal or a couple of these subdividing projects can make a huge difference in your bottom line. I appreciate you sharing those free slides in the video. I'm going to make sure we put that in our show notes, guys. If you head over, we're actually completely rebranding. We're going to be pebblerei.com. You still, if you go to reiconversion.com, you'll still get redirected, so not to worry. I'm not sure. We're in the middle of that, so when this episode airs, I'm not sure which link is going to work, but head over to pebblerei.com to the podcast section. You'll find this episode here with Travis, all on subdividing. Now, one thing I really want to talk about, and I love doing this with Travis, we only do this a few times a year. We are going to be doing another classroom, what we call our classroom series webinar. These are live webinars that we've done in the past. We've done them with awesome people like Travis, like Jaron. And we're going to be doing another one here with Travis. Like I mentioned, Travis is really at the forefront. Like one thing I love about some of the education that you put out there, I feel like I'm shilling for you right now, but I really mean this. When I see a lot of the courses out there, a lot of the education, it is sort of your standard, flip course, I guess you would call it. But one of the things that Travis really does is he shares literally some of the stuff he is doing. That's it. I mean, he's sharing some of the cutting edge stuff that he's doing, some of the more advanced strategies. And what we're going to be doing on July 14th, and you can head over to pebblerei.com/portfolio to learn more about this. Travis, can you share with them what we're going to be talking about and what we're going to be bringing on that webinar, on that one-day webinar that we're doing?
Yeah, absolutely. So it's another one of the mastermind strategies, right? Another one of the advanced strategies here where we're going to talk about. So it's kind of the premise is kind of we've always been taught, through all the courses is we always scrub out duplicates, right? We always remove duplicates, and I kind of always just accepted that, right, as gospel, because that's what I was taught. That's what I was told. It makes sense, right? Yeah. Like anything, if you kind of like flip it on its head, and say, all right, if I'm the contrarian investor, right, and why do we always scrub out duplicates? And the logic is, well, we don't want to send them 10 or 20 letters, right, to the same person. And we had bought in our own business, we had bought multiple portfolios, I guess you'd call them, right? At the time, find one seller, and it's kind of like, hey, do you own any other properties? And well, yeah, I actually own 3-4 properties, right? I'm willing to sell them all, type thing. Well, for me, what really came from it is I said, what if we targeted these individuals specifically? So very much like let's say we scrub our lists for landlocked properties and we remove those. Well, what if we all took all those lists and gave them to somebody that's all they specialize in is landlocked properties, right? And they just want to target those, at 10 or 15% or something offers. But same thing with duplicates, right? All the duplicates we're scrubbing out. What if I said what if I actually discarded the single property owners? Because if I'm paying for a stamp, right, paying for a letter to mail them, why, you know what I mean? Why should I pay to mail all of them? So I started pulling data on, what I'd call duplicate owners or multi-parcel owners, right? And so that's really what this training is about, is explaining to you, explaining to listeners and teaching people how to target those duplicate owners. And I call them portfolio owners because it could be a duplicate, could be as little as 2, but they could also, there's a number of people out there that own 20, 30, 40, 50 properties. It's incredible when you start looking at the data. So that's really what the portfolio takedown strategy is targeting those portfolio owners and trying to swoop in and buy up a number of properties all in one transaction. And the math is beautiful on one escrow, right? One closing. A lot of people don't realize this, but a second parcel might only cost you another $200-$400 to add to a transaction, right? Or a close. So if you can buy 20 properties in one transaction, it's just incredibly efficient and it saves money. And then just drip them out on the disposition side. But it's really, that's what the training is going to be, is teaching people something I've done in my own business, something I've taught clients, something I've worked with clients together on. We've, funded portfolio deals. Ironically, I had a client that he had actually mailed in the same markets I mail, right? And this just speaks to people being discouraged about things being competitive and saturated, right? I had a client mailing in the same markets that I mail, and he ended up getting in touch with a seller that had 30 properties he wanted to sell. Well, it was a seller I had bought from in the past. Years ago, I had bought by 2 different occasions. I had bought portfolios from this seller, and some of those properties were off limits at the time, right? And then my client mailed him, and it was good timing, and he was ready to unload like 30 of them. So we worked together, on reviewing those 30 properties, like disqualifying 10, and ended up buying 20. And then it kind of made me realize that in our own business, my wife, Becca, and I, we were already targeting portfolio owners, and we were doing it with like a USPS 2-day, priority envelope, right? Something that would get open. So anyway, I don't want to share everything about it, but we were already kind of like DIY in our portfolio takedown strategy. And I said, you know what, let's formalize this. You know what I mean? Let's really create a training, put it together, and help other people replicate this play that we've had success with and some of my clients haven't. And that's the premise of the whole portfolio takedown, is how do we target somebody that owns, 2-3 buildable lots, in a metro or residential area? How do we target a rural vacant landowner that owns 20, 30 properties? So you pair that together, some of these advanced strategies, do 1 or 2 subdivide projects a year, do 1 or 2 portfolios a year. You know what I mean? And it just makes for an incredible year. So this portfolio is, like you said, I think some of these strategies are just, it's really innovative, and what it comes from for me is not a place of, I think, creativity or innovation. It kind of comes from, like, even in my past, like entrepreneurial, I was very shiny object, kind of all over the place prior to finding this asset class. So what this does, all these innovative strategies, they allow me to be, shiny object syndrome within the asset class of land, right? Within our own state of the land asset class, but still go out there and test all these different strategies, run these different plays. So it's fun. It keeps it, you know what I mean? It keeps it really fun, and beyond fun, it's stupid profitable, right?
I know we use the word value add, but I feel like that's such a value add to the investor to be, trying different strategies like this. Anyways, I'm not going to let you spoil any more here. On July the 14th, guys, head over to pebble.rei.com/portfolio. I don't know why I set the link earlier when Travis didn't even talk about what we're doing, but now you know it. I said it twice. Make sure you head over to pebble.rei.com/portfolio. There's going to be a form there. There's going to be a video there explaining about that. There's going to have all the date information. You do want to make sure you register. You do not want to miss these. And they will only be available for a limited time to rewatch. So make sure you do check that out. Travis, I'm looking very, very forward to that when it does come out. We're going to have a great, great time together live. Other than that, Travis, I really want to thank you coming on this show. You're always such a wealth of knowledge. But I always tell people how it's kind of a cheesy term, but how cutting edge and how practical some of the things that you're doing. I laughed earlier when you said the shiny ball syndrome. It's like now that you're doing it within land, it feels more legitimate that you can chase around these different.
I can get away with it, right? Yeah,
exactly.
Yeah. My version of Richard Branson, right? I can get away with all my little entrepreneurial ideas, right? I can basically run additional plays in the playbook, and it satisfies that, wanting to do
Yes.
something new without going out and diving into rental houses or multifamily or storage shed or yet, right?
Exactly. All right, guys, I'm going to leave a bunch of stuff in the show notes. Make sure you head over to pebblerei.com. Travis, thank you very much for your time and sharing all of your strategies here. Looking forward to the webinar again.
My pleasure, Jesse.
Talk to you soon.
All right, take care. Thanks.